But how can you run a couple of $1 billion worth of investments from a surrounding like this? Don't you have to be on Wall Street?
We did move here because it is so very pleasant. But we now have found that in the 22 years we've lived here, the performance of our mutual funds is better than in the 25 years we were managing them from Radio City in New York.
Well, how do you account for this? I mean, you could work at Radio City and do things differently.
Yes, we tried to. But we go to the same meetings as the other security analysts, and the people who speak are so sensible that we can't help being influenced. It's much easier to be odd when you're 1,000 miles away.
Trying to be odd, going against the herd, has been a Templeton trademark as he searches for bargains that others have overlooked. How do you know? You've always said that you should sell when the herd is happiest and buy when it's gloomy. How do you know when the herd is gloomy that it isn't right?
Sometimes they are. And of course, we make hundreds of mistakes all the time. But we have found, from the very time we started our investment council operation 44 years ago, we published as the motto of our business to buy when others are despondently selling, and to sell when others are avidly buying requires the greatest fortitude and pays the greatest reward. Now, this applies not only to stock market cycles, but it applies to particular industries and types of stocks. Basically, we determine that by finding out what is selling at a depressed price. If a stock is selling for a quarter or a half of what it's worth, then it is a bargain and is, in most cases, unpopular with other investors.
Mainly, you like to buy companies that are out of favor. For example, I noticed that your biggest position is in Royal Dutch, but everybody's expecting oil prices to go down. Doesn't that bother you?
Oh, yes, of course it bothers us, but there's so many other factors. We do own a very large amount. In fact, I think Royal Dutch Petroleum is the largest holding in our mutual funds, because at the present price, it's selling for only 4 times what we think it will earn this year. And we estimate that in the long run, it will earn more. And it's selling for less than half what it could liquidate for, and only about 3 times its present annual cash flow, and pays a good dividend. So for many, many reasons, it looks like the best bargain in the energy industry. It's very widely expected that there will be a decrease in the price of oil. And if the low point for share prices is when the most investors are expecting bad news, not after the bad news comes out. Now, it is possible that it might get lower, but we are long-range investors. Our average holding period is 6 years.
6 years.
So in the long run, it'll be worth much more.
Your global fund looks all over the world for investments, and I noticed that a couple of years ago you were heavily into Japan, and now you've brought all that money practically back to the United States. Isn't that true? Is that a temporary phenomenon?
Yes, that is temporary. We are worldwide bargain hunters. We search all over the world and make estimates of the values of each corporation, and then buy those shares that have the lowest market price at the time in relation to our estimate of value. And at one time, that was in Japan. In that one nation alone, we had over 50% of our total investments, because we were buying the very finest companies at 3 times earnings, some at 2 times earnings. But now, instead of 50% in Japan, we're less than 3% in Japan, because meanwhile, the prices there have gone up. The Dow Jones Industrial Average in Japan is now over 25 times earnings, and the index of smaller companies in Japan's over 41 times earnings. So that now they're very difficult and very few bargains to be found there, and more bargains to be found in America and other nations.
So if you're looking around the world, what country or countries would you pick as the best shot?
We never approach it that way. Almost all security analysts ask themselves which nation and which industry before they make a selection. If no one were doing it, that would be a good method. But since the best results are obtained in those areas where other security analysts are not working, we just say we will buy the best bargain we can find, then later find out what nation it's in. Now, approaching it from that end, we have found an unusually large amount of bargains recently in the United States, also in Canada, and in Australia, and in the Netherlands.
Academicians have a theory that no one can beat the market consistently, that the markets are efficient, that all the news is already in the price. And yet there are a handful of great investors who have single-handedly disproved that theory by consistently beating the market over a period of many years, and you're one of them. How would you distinguish yourself, say, from Philip Fisher or Warren Buffett?
Probably in the fact that I look worldwide more than the others do and search in a wider variety of areas. Probably because I'm willing to make estimates of earning power further into the future than others are.